Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the micro bearish scenario where we're looking for a three-wave structure to the downside for eventually more upside, where currently we are inside a wave Y. Now earlier today when price was ranging over here, we were looking for a move towards the upside to reach that blue target box, reject over there, and then look for a movement towards the downside. Price moved towards the upside, rejected, started to move down, and now of course the question is, will it continue to move towards the downside to this level over here at 26.1k, which is this low for maybe a bit of a liquidity grab and then continuation to the upside? Or with this crazy candle, by the way, when I'm recording right now, price is gonna do a move towards the upside. We'll wait and see. The target that you see over here, the two fibs, are the most common target area for wave Y, which is taken from the high of W to the low of W to the high of wave X in confluence with this low over here. And right below this most common target area, we have this blue box between 26k and 25.9k for some very interesting support indeed. If we then go to the micro more bullish scenario, which is an alternative with the bearish scenario being my preferred one at the moment, then over here, this is the low of the corrective structure. So we're then looking at this to be a three-wave finished. And from these lows, we're now looking for upside. Now, in the previous video, I went into a little bit more detail of why this is an alternative scenario and why my preferred scenario is looking for more downside to at least take these lows. And in this scenario, which then is an alternative scenario, this is then a wave 1. Then we're looking for a corrective, a three-wave structure over here, which has to be an expanding flat in this bullish scenario because price took this low over here. So this can't be a 1-2-1-2 anymore for then a bigger 3 towards the upside, because if this is the second wave 1 and then wave 2, it is not allowed to take this low. So that is the reason why in this particular scenario, I have this labeled as a wave 1 and then a big ABC expanding flat with a 1, 2, 3, 4, 5 wave move in then this wave C to finish wave 2, after which we then expect continuation to the upside. The reason for me this feels as an alternative is mainly because this wave B now over here is very, very high. So the most common target area for wave B is the 1.236 to the 1.38 Fibonacci, taken from the high of wave 1 to the low of wave A. But as you can see, it has definitely closed many candles above this level, and the 1.618 is a rare target for an expanding flat wave B, and there's even candles closing above this level as well, so it is not very nicely respected. Then you have a 5-wave move to the downside, which has to take the low of wave A, and that is indeed what happened, and that is a minimum requirement. So I still have it on the chart, even though this wave B is very, very high over here. If we then zoom out and go to the low time frame, so let's move to the 1 hour over here, then what I'm looking for at the moment is potentially a 3-wave structure to the upside in the more bullish scenario. So here we then have a finished 5-wave move in a wave 1 or a wave A, followed by now a 3-wave corrective structure in a wave B or a wave 2, for then eventually continuation to the upside in a wave C or a wave 3. Now previously I had potentially this impulse as a 1, 2, 3, 4, 5. However, this wave 4 now is taking so incredibly long that in my opinion it's taking too long now, and therefore I currently look at this being the end of a wave 1 or a wave A and expecting a bit more downside, because if you look at the Fibonacci's that I've pulled over here, these are pulled from the low of wave 1 to the high of wave 5. And for a wave B and also for a minimum target of wave 2, you expect a 382 to be hit, which is currently sitting at 26k, right on top of the target box that we have between 26k and 25.9k as well. Important to know is that for a wave B, a bounce on the 382 is absolutely fine. It's common, but for a wave 2, the most common targets are the 0.5 to the 0.786, which is 25.7k to 25.2k. Now in this scenario, you then expect a continuation to the upside in C or 3, a wave 3 being more parabolic with volume increasing to the upside, and a wave C tends to be a bit more lazy, more sideways to the upside, and volume quite similar to this move towards the upside. You also see fib times on the chart. These are the fib times taken from the low of the impulse to the high of the impulse to measure this corrective structure. The low over here has been made right on top of the 1-to-1, so that is actually quite nice. However, a wave B or a wave 2 can take longer than the impulse before, so a continuation to the downside before up is absolutely fine as well. If price, however, moves towards the upside over here impulsively, then this can still be the previous scenario in a 1, 2, 3, 4, and then eventually a wave 5, after which we then get a corrective structure. And the more bearish scenario over here is that this is a finished impulsive structure, and we are looking at a 1, 2, 1, 2 for then a bigger 3 to the downside. But that is very alternative, and also it doesn't count very nicely. This being a wave 1 over here to the downside is not something I'm currently looking at, but I do think it is at least important to let you know. If we then go to the 15-minute, look at the divergences. We had some bullish divergences, and actually we had them again when price came to the downside once more. So we had bullish divergences, higher low in price, lower low on the CVD. These played out very nicely indeed, taking this high. Then price moved towards the downside just now and started to create again bullish divergences over here, which I'll show you right now. So if we go to the 15, then what you see over here is higher lows on price, but on a blue line, lower low on the CVD, and then price came down once more, creating again a higher low on price, but still on the blue line, a lower low on the CVD. So the blue line is showing double bullish divergences. These ones already playing out, and with these bullish divergences, the target is actually taking these highs over here. So that is quite interesting, because from an Elliott Wave point of view, downside of course is very attractive, because this being an ABC just counts very, very weirdly, but we do have some bullish divergences, so it's a bit of a mix. And of course, if one is not completely clear about, you know, your own personal strategy or what is happening on the chart, it is absolutely no problem to just sit on the sidelines, relax, chill, maybe go outside, leave the charts for a little bit, and just wait and see till your particular setup is gonna appear maybe in the future as well. You know, you don't have to trade every day, you don't have to trade every single move. Maybe it's very volatile, yeah, maybe you're gonna miss a move to the downside or a move to the upside, but that is trading. You know, you got to pick your specific setups and then wait and see what happens. So in this particular scenario, if price is going to continue pushing towards the upside and then potentially this wave 5 scenario, hey, that is no problem at all, because we had that scenario in the previous video, and we do take it at least into account, where this then has to be the low of the corrective structure, right? Now this looks very much like a 3-wave structure, and we have to wait and see how this is going to form. So that being said, I hope this video was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.